In the second week of October, we witnessed some volatility in the market, particularly on the downturn, which in the short term we have seen as being somewhat unfamiliar, especially in this market. A 6-day consecutive dip in most broad-based equity markets, primarily in the US, has led to somewhat of a conundrum, and many refer to it as a knee-jerk reaction and convolution of a number of fearful factors and events, rather than one specific event. Some factors that may have contributed are the Fed fund rates changing, potential trade wars and political calamity, and we think angsty investors who are hearing the voices of the naysayers more loudly as they point to a bear market and the end of the good times. As is always the case, given the market index is comprised of individual stocks, when we see big pullbacks on a broad index, that also means there are some big pullbacks on some securities, and I think they're presenting an opportunity in value play. If we consider the fact that earnings are healthy and growing, and balance sheets are looking strong and secure, there isn't much reason for such a drastic pullback other than potential macro events hindering the upside. Portfolio managers and investment advisors advise and advocate holding a portion of your holdings in cash exactly for moments like these. When value propositions present themselves, such as right now, with a certain level of a cash reserve, you now have ammunition in your arsenal to launch a full-fledged assault in aims of obtaining value. To put into perspective, at the timing of this recording, these following stocks are off their 52-week highs by the following percentages. So the biggest dips are some that we have mentioned in previous videos, particularly the Chinese stocks. I have a video on the Chinese stock market just up here. Tencent down 42%, Alibaba 34%, and Baidu down 32%. If we look at the FANGs, we see Facebook down 31%, Apple and Amazon down 7 and 14% respectively, Netflix down 23%, and Google down 15%. Other great fundamental companies who we think have a long-term upside are Intel, PayPal, Visa, and Microsoft, and they are down -22, 20, 11, and 9% respectively. We are big fans and believers in almost all these stocks and hold positions in them, with the exception of Netflix, who we are bearish on. Our reasoning for that we have in another video, just up right here. So the question is this one of those moments, as Warren Buffett would say, to become greedy when others become fearful? We believe the answer is a resounding yes. Therefore, our recommendation is to buy these dips, as we will be doing the same. We want to thank you guys for listening. We hope this video has been informative, and once again, happy investing.